Hello, I'm Jim Pollard. Today we have a program for you on predatory lending, and it's something that's taking place among seniors today. It has to do with reverse mortgages. You stay tuned and watch this show and see what you can learn from it.
I really want to change the title of this particular presentation from predatory lending to something else, so if you can help me with that. I do usually get a lot of questions from your age group about reverse mortgages. I don't know if you're interested in that, if you want me to spend some time on that. Other people interested? And if you've got specific things that you want to ask questions about that I don't talk about, please do so. I do real good with questions. If I don't know the answer, I'll get it for you. I am an investigator for our office. I spent over 14 years for revenue for the state of Kentucky. I was a supervisor in property tax for an untold number of years. I came over here about 3 years ago. I do enjoy my job. It is never boring. There are times that I am extremely frustrated. White collar crime, which is what we are involved in here, is documentation. I was telling this couple down here right now, I think there are 23 boxes of documentation in my house. That's not counting the car and the office and everything else that I need to go through. We do regulate the state chartered banks in the state. We regulate the state chartered credit unions and mortgage companies, mortgage loan officers, mortgage lenders, check cashing entities, small loan companies. We now even supposedly regulate the Western unions of the world, the money transmitters. And the other side of our office does regulate securities, and you'll hear more about that from them later. Obviously, we have plenty to do. We are regulatory. We have no criminal authority. So some of my best friends are now Secret Service agents, FBI agents, some local police, postal inspectors. We have really done an all-out effort to try to prosecute some of these people. I like to say Roberta says one of hers is out in the mail fraud thing and comes with her. Mine are behind bars right now, and I prefer that they stay there. I've got one that's, he's got now 79 months to go, and I've actually got 81 or 82 months to go to retire, and I figure I'm buying out 2 or 3 months because I don't want to chase him again. Obviously, one of the biggest things we do right now is mortgage fraud. It's all over the news. You see all the headlines. Some of these are old. There's 2 factors at work as to why that we are basically into the mortgage situation that we're in. That's a lot of what we call non-traditional mortgage products. It's anything other than a fixed rate loan, basically. What we're used to, the old standard 30-year fixed rate loan. They were adjustable rates. These are the ARM loans that you hear about right now that have adjusted, and they go to some absorbent amount of money that people cannot pay. A lot of them adjust every 6 months. I've even seen a few of them that adjust every 3 months. And no matter that the interest rate seems to fall, the rate on that thing seems to go up. Pay option ARMs, that's one of the worst things that was ever created. Our office will always tell you that every mortgage product has its place, and pay option ARMs did. But what pay option ARMs did was gave you the opportunity to select what you wanted to pay each month. You could pay interest only. You pay a little bit on the equity. You could pay a regular mortgage payment. Guess what most people elected to do? Pay interest only. So you were in a situation where you got upside down in your house really fast. Interest only loans is another situation. It's amazing. What we see in Kentucky right now with the foreclosure situation are 2 separate, almost classifications of people and properties that are falling into foreclosure. We are fortunate, we're one of 4 states that we found out that per capita, more people in our state own their homes free and clear than some of these other states that are happening. It's us, it's Tennessee, Missouri, and it's either Minnesota or Michigan. So we've got pockets in which we're not facing foreclosure. And a lot of it is focused in the metropolitan areas, and you've got one of 2 things. You've either got people who were subprime borrowers, lower income, lower dollar value houses, never qualified for a loan before. A lot of those people never should own homes. They should not own them today. They never should have. And so you've got that that's going into foreclosure. On the other side of it, you've got the situation where people wanted more house than what they could afford. And those are the higher dollar homes, the other end of the spectrum, and a lot of people that couldn't afford even the interest only. Got an acquaintance that I saw her and her husband build this house, beautiful house, and I thought, they don't make a whole lot more money than I do. It's been about 5 years ago. It's an interest-only loan. She was so proud of it because, you know, John and Jenny down the street here, they had a house just like it, and this is what she wanted. I said, you can't afford this. Yes, we can. A couple years ago, started doing some crying, couldn't afford it. And of course, the interest only is going to, at 5 years, you got to refinance that house, and you're going to end up owing more money. Today, the house is in foreclosure. Doesn't understand why I couldn't help her. So you basically got both ends of the spectrum. Predatory lending has a whole lot of definitions, and it depends upon the particular day and time as to what I'm doing, as to what it falls under. It seems like the supposed definition includes a whole lot of any number of fraudulent, deceptive, discriminatory, or unfavorable lending practices. And that's a whole lot to say that describes an awful lot of things. And unfortunately, while some of this stuff is illegal, a lot of it's not. It's just not in the best interest of the borrower. This year, in the General Assembly, we got legislation passed that we've been trying to pass for 3 years. Because of the mortgage meltdown, we got more attention to it. And a lot of what we did was, even our mortgage brokers now, they used to have a document, honestly, that was legal, that said that they had people sign that says, I'm not acting as your agent. In other words, they weren't acting in your best benefit. They were acting in their best benefit. We now have laws that says, you're going to have a document that you give to this borrower that says that you are acting in their best interest. That this is what you're doing. There's now a cap set on what they can make. We took away a lot of their things that they were able to do to make money. But unfortunately, we're like every other state in the union. We've been trying to get a lot of this stuff passed for years. I got Kentucky sinuses, excuse me. But nobody wanted to listen to us because it was a great and wonderful world. Now all of a sudden everybody's willing to listen to the regulatory agencies who've been trying to tell you for years that you needed to do something different because we were in a situation that was about to fall apart. The federal government and HUD says that there are 7 signs of predatory home loans. Ourselves in the great state of North Carolina, state of Georgia, state of Florida, state of Texas say there are 8. So the 8th one that's on here is from the states. One of them is excessive fees. We discussed this in the last seminar because banks, mortgage brokers, they're all going to charge fees for loans. You know that. If you've ever gone for a home loan, there's fees on that loan. And you have to be really careful about what you're signing. You have to ask questions as to whether or not they can validly charge you that. And that is one reason why we got it passed this year, so that they can't make more than 4%. I've seen a lot of loans at 7.99% when you added up all the fees that were charged to you as the borrower. And that was legal because the federal law doesn't say you go into high cost till you get to 8%. So we put 4% on. Abusive prepayment penalties. And that was where a lot of these adjustable rates adjusted after 2 years, after 24 months. Some of them were 36 months. Prepayment penalties were as much as 5 years, which meant that you could have your loan adjusted 25 months and it was going to cost you another $12,000 to get out of it based upon the percentage or whatever that was on there as a prepayment penalty. And basically, abusive prepayment penalties are considered to be longer than the arm. We stopped that too this year. Like I say, nobody wanted to listen to us before. Yield spread premium. I don't know how many of you have ever paid any attention to that on a loan. Unfortunately, the banks don't have to put it on the HUD, which is the final closing statement, although they do charge it. And what that is basically a kickback They don't like that terminology. My brokers don't either. But say I've got Countrywide, the biggest lender in the country, and I've got ABC Mortgage down here doing the loan. And basically what yield spread premium is a percentage that comes back to the broker for bringing them a higher interest rate. Bringing the lender a higher interest rate on you. That may be 1/4%, but when you see the percentage they get back for that, it's hefty. It's not illegal, but it is illegal to do too much of it. Loan flipping, lot of different categories there. Loan flipping is where that you turn around and you get a loan on your house, and 3 months later or whatever, you sell it to somebody else who may be a straw buyer who doesn't exist, but you sell it for more, flip the house, and it continues on and on. Some of them are flipped as many. I've got a situation in Louisville right now on mortgage fraud. I have individuals who are living in $800 and some odd $1,000 homes. Got 3 of them. They're all brothers. They've been living in those houses. There's one man been living in his house since 2001. He has never owned the property. It's never been in his name. Gets somebody else. He calls them good Samaritans. I call them straw buyers, to fill out loan applications and get a loan on the house. 6 months down the road, there's no payments made on it. He goes out and gets somebody else to do it. This is a long, convoluted mess. But anyway, over a period of 7 years, he's lived in the house. He's never owned it. Never been a payment made on it. So there's all kinds of people. Unnecessary products are another thing. If anybody ever tries to sell you credit life insurance or disability insurance associated with a home loan, don't do that. You don't have to do that. There are certain lenders across the country who were saying that in order to get a loan with us, you had to do that. I had a lady in Louisville, she's 45 years old. Home loan, big entity out of Texas. Her credit life insurance payment per month, which gets added to your loan payment, was $109.79. This woman had no medical problems. She's paying over $1,200 a year. She could have got credit life insurance for about $10 a month. So you got to be careful of that. They also try to sell you disability insurance. Steering and targeting, we may talk about that a little bit more in a little while, but that involved one of our big lenders across the country who you had a 720 credit score, but for some reason or another you were getting an adjustable rate mortgage instead of a 30-year fixed rate. They had a clause in their computer program. It didn't matter how much money you had in the bank, how much money you had in mutual funds, stocks, investments, whatever. They ignored that. They were ignoring it. And so therefore all they were looking at was your income versus your liabilities. They were putting people into adjustable rate loans, and it needed to be a fixed rate loan. That's what's called steering, and targeting is a whole lot the same thing. Bait and switch, that's ours, and that's the other states. That is, if you go in and you say, I want a fixed rate loan. I want a 30-year fixed rate loan on my house. All the documents you fill out at front and all the documents that you get indicate you're going to get a 30-year fixed rate loan. There's all kinds of documents that are associated with a home loan by the federal government. Any lender, bank, anybody else is supposed to give you. Take it home, it all says 30-year fixed rate loan. You get to closing. Most people, if they're refinancing, they haven't paid their last home loan payment, they haven't paid their credit card bills or whatever, because they're going to roll all this in here and just go pay it off. If you're buying a house, you got the builder or the seller or whatever that's sitting there, they're expecting their money. You get to closing, pardon me, and all of a sudden, it's an adjustable rate loan. But don't worry about it. Don't worry about it. Just sign all this, and 6 months from now, we'll get it straight and all this. That is called bait and switch. And what it is, you need that fixed rate loan. That's what you applied for. You get all the way to closing, and for various reasons, you need that money. And it's an adjustable rate loan, and you're desperate enough that you sign it. And you go on with it. And that's what's called bait and switch. They promise you one thing, and they give you something else. Things to watch out for. This is probably the motto of our office. If it sounds too good to be true, it is. So many times whenever we have people who call and complain, they start telling us about what they were, I don't guess I have to do that. I'll behave. that better? They start telling us what's happening, and you start shaking your head because you think, there's no way that could happen. So if it sounds to be too good to be true, it probably is. Limited time offers, let me tell you something. In a home loan, there's never such thing as a limited time offer. They're not going to not be able to give you tomorrow the same loan product. Now, the interest rate might change, but there's never going to be a limited time offer. Don't give out your personal information on the phone or on the internet. On email, you're going to hear all of us probably preach on this, but don't do that. Another thing is, and I don't know how prevalent this is so far as actually on the streets of Murray, but you're seeing it on TV, you do not have to pay for credit counseling. If somebody's got a bad credit score, they've got situations where they've got medical bills or whatever that's on their credit report, you don't have to pay somebody $100 a month for 6 months to get your credit improved by 5 points. Nothing illegal about it. Believe me, we would like for that to happen. But Kentucky Housing Corp out here, who hands out all kinds of literature, they have free credit counseling on the phone and all across the state. There's other agencies too. So, I mean, even if you've got somebody in your family, we get complaints all the time. Got one in E-Town where people they're charging them $125 a month for 6 months. On average, they are increasing somebody's credit score by 4 to 8 points. You can't do that. You don't have to do that. So that's another beware. Don't deal with an unlicensed lender. At the end of this, you'll see our website, and that's talking about if you've ever got a question about a bank, anybody we regulate, anybody I called off, check cashers, the whole bit, you can go to our website and you can see whether or not that they hold a license to do business in this state. Don't sign documents that you don't understand. Incorrect information, false information. This is what you see a lot with people that we say now own homes who shouldn't own homes. Our loan officers, whoever they were, put down the wrong income. You didn't earn that much income a month. Get all promises in writing. If somebody tells you that they're going to do something, make sure that they give it to you in writing. If y'all got any questions about any of this that comes up here, please get copies of everything you ever sign. Somebody calls us to complain about something, the first thing we start saying is, we need copies of everything you got. You would be surprised how many people tell us we don't have them. In home loan, in any type of a loan, the federal government requires that you get a stack of papers about that high. So if they don't want to give it to you, that's a big red flag. We'll talk about the consult with someone you trust. When we get to the reverse mortgages, this is true of those. You have 3 business days to cancel that loan. Okay? Advance fee schemes, we'll talk a little bit about it. They become real prevalent now. They're on the internet for the most part, but a lot of stuff's being mailed out. Got a lot of people falling prey to it because they're trying to find the money to pay for their home loan this month. The latest one we've got's on the internet. It's called Lexington Financial Services. It's supposedly based out of Lexington, Kentucky. It's on New Circle Road Northwest there in Lexington. It's a Walmart. Trust me, I've been there. We've been all over the place. The Better Business Bureau, we're all trying to find this Lexington Financial Services. One of the people who fell victim to this is a student at Morehead State University. His parents gave him the money for his books and his fees, and in his infinite wisdom, he decided, he was a returning student to Morehead, and he decided that he wanted to get the money to buy himself a little small used pickup truck. So he's out on the internet looking for money, how to get money. So he signs up with Lexington Financial Services because he thinks, hey, you know, that's Lexington, Kentucky, it's close to Morehead. I think he's from Minnesota. Gets all these documents signed, it all looks great and wonderful. And then all of a sudden they tell him that they have to have the first payment up front before they'll send him his money and put it into his checking account. He used his, long story short is, before it was over with, they got over $3,800 from this young man. Maybe it's $3,300, it's a different scheme. $3,300 from him because they kept saying, okay, well, we got $750 and now we need this and now we need that in order to be able, they call it insurance. That was another thing. Nationwide Insurance was real surprised to know that their name was supposedly on insurance documents. Unfortunately, we can't get his money back. Most of these things are based out of Canada. And I have come to find out, and so have a lot of other of us, that the Royal Canadian Mounted Police actually are the agency that is supposed to be helping all of us here in the States with it. They don't have the financial wherewithal or the financial background to be able to, or want to, seems to be able to help us here in the States. This Lexington Financial Services, we have shut the website down now 4 times. It was LexingtonFinancialServices.com, shut it down. LexingtonFinancialServices.net, shut it down. I don't even remember the last 2. And unfortunately, that's not all of it, but we get complaints from all over the country on situations like this. We get Arizona, we've been California. I had a banker in New York State who fell for one. And they call us because maybe it says it's Kentucky Title Services was another one, supposedly based here in the state of Kentucky. Selling or buying assistance. You see a lot of this now with the foreclosures. You've got these companies out here who say, I tell you what, I'll help you sell your house. You're going into foreclosure, I'll help you sell it. But you got to give me money. People give these people money who don't have the money to make their house payments. Same thing, they're going to help them buy. Another situation, they offer to repair your credit. It's just one of the, if you have any experience with it or you ever come face to face with anything like this, please call us. We keep finding them all over the state. And we actually did have one about 6 months ago up in Paducah who, needless to say, are not in business anymore. But what this does is it basically, people who are already hurting, and they get into situations where they're charged more and more money. We had a lady from out of Oldham County up close to Louisville. She was buying a home in Princeton, I believe, and she had signed this document and form with these people out of Oldham County, and then they were going to help her sell her house and buy another one. And we got a call from the real estate agent who was selling the house because this company was demanding $8,000 from this woman because they didn't end up helping her buy her house, but she had to pay this fee. And they wanted to put it on the HUD, which is the closing statement. And we tried to talk to the woman and tried to tell her, don't do this. You don't have to do this. She wanted out of it so bad that she allowed it to happen, and we did too. It went on the HUD, and we said, hello, that's a violation of federal law. It's very nice to meet you. We were able to get her money back. But it is amazing what people will fall for, and that's one of them. Reverse mortgages. Robert Wagner is a very good-looking man. He always has been. I remember Heart to Heart, and who's some others that are out there. But reverse mortgages are not the end-all, be-all that they won't tell you it is. And like everything else, we'll tell you that reverse mortgages have their place. And if you, someone you trust explicitly, your heirs, know what's going on, you go into it with your eyes wide open, there's no problem with them. But the fact of the matter is that too many people get, like a better terminology, snookered. People within your family, they don't know what's going on. The executor of your estates. One of the worst things that can happen, and we've got this in northern Kentucky right now, is for someone to pass away and the executor, the heirs, don't know anything at all about a reverse mortgage or other financial decisions, and they are faced with the fact of the matter that there's 25% of the house that there's a loan owed on it, there's 100% of it, and you have to make a choice as to what you're going to do in a very grief-stricken situation where you don't make the best of decisions. But in order to qualify for, and if y'all got questions about any of this, please ask me, because there's more things than what are up here. You have to be 62 years of age. You have to live in your own home. and you have to own it. Now, that can be joint ownership or whatever. There can be no other loan on the house at the time that a reverse mortgage is taken out. That does not mean that you can't pay one off with the proceeds from a reverse mortgage, but it can be the only thing that you have. They are always due and payable in full, what amount of money you owe, on the day after you pass away or the 366th day after the last remaining survivor who owns an interest in the house is no longer in the house. And that basically means 1 year and 1 day from the time that you end up in, say, an extended care facility, if you have to move out of state, out of town, or whatever with family. Yes, sir?
So you're saying that this comes due the day after the person dies?
Yes.
So there's no time for probate?
They do allow probate, yes, but the fact of the matter is that's what happens is that the person who is the executor and the heirs are basically hit up front within days after you die that, hey, this is here and something has to be done about it. The decisions have to be made. So it's pretty much, it's a slam dunk is what happens, especially where the people that are involved in the financial decisions after you are no longer here or after you're no longer in the house have to make a decision pretty quickly. A lot of times, and that's not a situation where you make good, sound financial decisions a lot of times.
What did you say about a nursing home?
The loans are due and payable in full in the event that if you move out of your house, okay, and you are gone for 366 days. That's 1 day in 1 year. Most of the time that occurs if you move into an extended care facility such as a nursing home, or you end up, spending or living with family members or whatever. Does that make sense? Yeah. Of course, the other thing of it is, too, we see where houses are sold. You decide to sell the house. It's due then, too. The loan amounts vary. The payment options, vary also. We'll talk more about that. Never draw out more money than what you need. What happens here, and this is so prevalent, and our sister state of Florida has really encountered this. We do not advise that you ever take out more money out of the equity of your house than what you need. But if you take it out and all in a lump sum, say you get a $100,000 reverse mortgage and you can draw out $100,000 and you take that all out this year, guess what the Social Security Administration does next year? They go, hey, you got $100,000 worth of income this year. And if you didn't take all that money and either put it to good use, don't invest it, that's another thing we'll talk about, they're going to look at that as income. And if you leave it in liquid accounts, such as ready access accounts, we've seen actual situations where your Social Security goes to nothing for next year because they see that you got income from last year. Don't use reverse mortgages for investing. I believe it's Chicago recently. The Secret Service found this. And it's been reported in other places. We have life insurance agents who are roaming around telling people that, you get your money, you get a reverse mortgage, and we'll invest it in annuities for you. You are never going to make enough money off any investment to warrant taking the equity out of your home. You're going to lose money. Unfortunately, a lot of people think that sounds really good. 3 different types of reverse mortgages, and I don't know if Murray or anywhere around here offers this first one. It's actually been around for a while. It's a single-purpose reverse mortgage. The city of Louisville, the city of Lexington, city of Bowling Green, some others across the state. If you want to, and it's in certain sectors of the city, if you want to make modifications to your house, you want to add on to it, You want to, one in Louisville I know of, where there was a fire hazard involved with fireplace and that type of thing. The cities will actually, if you qualify, and there's all these qualifications, but if you qualify for it and you actually invest the money the way that you said you were going to, because you have to, fill out all this. In the city of Louisville it is, in West Louisville, if you live in that house for 11 years after that, it's forgiven. It's never going to be the value of your home, but it does give you money to be able to make modifications, remodels, or whatever that are necessary. Those have been around for a long time. I ran into one in the city of Louisville for the first time about 3 years ago, and I went, this is a pretty good deal. Of course, like I say, it's got certain restrictions on it so far as the areas, but it has helped tremendously in the city of Lexington, in the northeastern side of that city, because they've been able to do a lot of the renovations to the houses with that. Of course, if you move out of your house before then, it's got to be paid. Federally insured reverse mortgages, that's what you hear the most about. That's what Robert Wagner's talking about. They are insured by the federal government. The banks now do reverse mortgages. We've seen it more and more. Some of them do not. Some of them still do not want to do reverse mortgages. Our mortgage brokers, we have some people who do them. And then there's proprietary reverse mortgages. As an individual, I would tell you to stay away from this one the most. Our person who bought this property in Princeton, I think it was, actually the people who were in this buy-sell assistance thing were involved in a proprietary reverse mortgage scheme too. And that is where you've got private investors. You've got people with money who are investing, and they're actually giving people the money for the reverse mortgages. The problem with that is, a lot of times the documents that we have seen that are associated with those definitely don't look and read like the documents that are required by the federal government. There are situations where they can demand payment, demand full payment, that you just really don't want to go down that road. It's very scary and it's very dangerous. There's many alternatives to reverse mortgages. What we see the most, where these are actually warranted, is where somebody, well, you see a lot of what they call baby boomers today who tell their parents, not interested in the house, don't want it, don't want the inheritance, I want you to be able to live as you should. And maybe you need $10,000 up front in order to make some renovations, pay some bills off, and then you can draw out more money as it goes along. It's okay as long as everybody's educated. Everybody knows what you've done. There's different ways, there's different methods to draw out of a reverse mortgage. First one, of course, is you can take the whole lump sum. It's like I say, Social Security Administration probably likes to see you do that because they're going to consider it all income. You can also draw out, like every quarter, a certain amount of money. You can set it up that way. Yeah, every month, that type of situation. You can do a combination of those, and that is where, say, you need $10,000 up front, and then you're going to take $2,000 every 3 months, or that type of thing. Thing of it is, they are rising debt and falling equity loans. The more you take out, the less equity you have in your house. Options and alternatives is to consider, and we tell people this all the time, is to consider whether or not that you want to sell the house that you are in, take those proceeds, buy a smaller house, rent one, invest what you get out of it. If the house is eating you alive so far as remodeling needs and modifications and that type of thing, I wouldn't advise a reverse mortgage, because all you're going to do is to add on to what's owed on the house, and in the end you're not going to have any options probably. Beware of somebody pushing you into it. That's our guys trying to sell life insurance annuities or sell investments and saying that it's the greatest thing since sliced bread. You're never going to make the interest off of that. You're never going to be able, versus the amount of money that you owe on your house. Because the other thing of it is, you do not make regular monthly payments on a reverse mortgage. You don't have to. You don't ever have to make any payments at all on it until you are deceased or out of the house for 366 days. thing of it is interest continues to accrue every day. And 95% of these are adjustable rate loans. They are not fixed rate loans. And unfortunately, it's amazing how that the interest rates keep dropping and the adjustable rates keep rising. So that is something you have to consider. Understand the terms of what you're signing. One of the things that I advise people to consider is a HELOC, and that's a home equity line of credit. If you've got a situation with the house where that you need to make some type of remodel or modification or whatever, home equity lines of credit, of course, they have to be paid back too, but they are most often a better option if you can afford it. Now, the other thing on home equity lines of credit that I tell people is, and we've actually got a mortgage examiner that keeps a HELOC on his house all the time. It stays at about $20,000. You have to pay the interest in full every month on a HELOC. And they usually are adjustable. Some of the banks are doing fixed rate ones now. But once you get the money out of that you need for whatever purpose to remodel or whatever, you really need to consider taking that HELOC and making a fixed rate loan. That way you're not paying the entire interest every month. There's a lot of places and a lot of available information on the reverse mortgage situation. Those are up here for you. I know that some of that's in the packets that we hand out. AARP has a great website. Department of HUD also does too. One of the things about the federally insured ones, which is really good, required by the federal government, be it a bank, be it a mortgage broker, whatever, pardon me, you have to go through counseling. It is required. There are hours of counseling that are required for you to go through. A lot of it's on the telephone, but you are required to do it because it has to be documented, it has to be signed off on. The other two, that's not that way. And that's part of HUD. FTC is getting into this more and more, and I'm going to go forward because this is us. This is Office of Financial Institutions. A lot of people don't know that we exist. A lot of people don't know what we do. I really didn't know. I worked all those years in revenue and also worked with our office on bank shares tax. And quite frankly, we've stepped up greatly what we try to do so far as investigations and so far as regulating and saying, you're not going to do that. And if you do that, we're going to find somebody to take you to jail. We work a lot with the federal government. Like I say, I've got really good friends in agencies that probably are good places to have friends. But one of the things that we did in our legislation this time, so many times the federal government has basically a dollar amount of loss that we have to get to before it is financially feasible for them to invest the amount of time and effort that it takes to prosecute. Which means a lot of times I had people on a county level that really needed to spend some time behind bars and that type of thing. And the Commonwealth's attorneys, the county's attorneys, they don't understand financial fraud for the most part, and they didn't have the monetary funds to be able to afford to prosecute it. What we did is, in this past session, the fines now that our banks pay, our mortgage people pay, check cashers, all these people that we're able to fine, that money's not going to the general fund of the state of Kentucky anymore. It's going into a fund that will pay for county attorneys, Commonwealth attorneys, local litigation, where that they could not afford to do it. And we will go anywhere to testify to try to get that done. But the biggest source that we get of knowing what's going on is the people, the citizens of this Commonwealth. I've many times had to walk out of places and go, something's wrong. Something's really wrong. But I couldn't put my finger on it. And you have to walk out going, you know, we're going to catch you. And the biggest portion of the time, the way we do, is somebody calls to complain. Somebody calls to tell us what's occurred. That's when we can go back in and we can go straight for what's going on. 95% of the time, it's you. It's not us. We stumble upon it by accident sometimes, but they're really good at hiding it from us. Yes, sir.
What kind of security can the homeowner, when he sells, can he receive to know that everything is straight, that everything is right? And because there's so many approaches to the loans that he doesn't understand that.
Right.
Now, where does the homeowner go?
The seller?
The seller.
The seller. First of all, if you're selling it through a real estate agent, you need to really know that real estate agent because they...
You really don't know them.
That's true. That's what I'm saying. If you don't know them, your local county court clerk, once that loan goes through, county court clerk,
Yeah.
because you need to make sure that the mortgage itself was filed, that the deed was filed. If all that's...
Know that now.
Pardon?
Do they have a responsibility of filing?
Yes, sir. It is required that all deeds and all mortgages be filed within the county, at the county court clerk's office.
Not filed.
Then you got a problem.
Well,
But that's public information that you can go check out yourself.
Yes, it is. Yes.
it's, if it's not filed,
Mm-hmm.
then you sell and then find out about it. What's the steps then?
Okay, first that question is, did you get your money and it was bona fide money? Was everything paid off on your part that was supposed to be paid
It's
off?
all paid then.
Okay. Then what happens is if you determine that the deed's not filed or the mortgage is not filed, you really should contact our office because that means that we're going to have to backtrack into that particular transaction. We would come to you and say, do you have a copy of the closing statement, which you should have, the HUD, it's called the HUD, because then we would start backtracking into who is the supposed lender here, what is this, why wasn't it recorded? So many times what we've found whenever it's not recorded is the fact of the matter that, well, there's some type of fraud committed within. But a lot of times, things that were supposed to be paid off were not paid off, and it actually turned out to be that you may have been paid in full, but the loan may have been for twice what the selling price on it was. And there was money that came out of that loan that went to somebody else that was not supposed to have it.
The reason I asked that question,
Okay.
I know of a situation where the property was sold and there was a penalty of $35,000 on that particular property because payments on the loan were not being received. And I don't know the steps that were taken in there, but they did pay. They had the previous owner, and he was penalized $35,000 on it.
I'd have called us before I'd have paid that, because I would call us before I would have paid something like that, because there's something not right on the other end of that.
It's complication of selling at the courthouse door. I don't understand the
Okay.
details, but I'm just telling
Yeah.
you that does occur.
Well, and there's so much out here that occurs that, I mean, we never say anymore that we've seen it all, because we haven't. Because there's so many different things in which that people try to defraud a lender, they try to defraud the seller. Like I say, a lot of times we have what turns out to be a straw buyer, and it may be somebody that you thought that you really were selling the property to. The person may not really have ever existed so far as that lender was concerned. It could be John Doe from Smithfield, Kentucky, and that person really doesn't exist when it boils down to it.
Moved from Kentucky to Texas,
Okay.
and then they had to work it out.
Yeah. Right. And like I say, I mean, you all are our best sources. And if something happens and you got any questions, and somebody starts trying to tell you something that you don't think is right when it concerns anything that we regulate, if it's not us when you call us, we'll find out who it is. If it's the AG or whoever, we get them involved. All right.
Any steps that should be taken.
Exactly. And I got to say, you know, a few years ago, I wouldn't have known either. And that's part of why we're out here. Because, you know, most people think with a home loan that you have to go to the federal government to talk about them. And that's not true.
Meetings
Right.
of this type is good.
Right.
For the homeowner or the seller, as well as for the person that's trying to secure the loan. You know.
That's right. Yeah. Is there other questions? Yes, ma'am?
You were speaking a while ago about the banks that are the loan companies that do the bait and switch do that?
No, ma'am.
Okay.
No, ma'am. But that's one of the things that I will tell you is one of the most important things is to get copies of everything you sign.
But if it's a reputable organization,
No.
not as likely.
That's true, right. Yeah, because they know if we come to see them, I'm not one of those favorite people walking the door. I've got a few of them that one of those situations where I know something's going on, but I don't know what it is. I keep going to the bathroom in those places. You know, so I got to go to the restroom. Yours is always clean. What's this right here? What are you doing? They don't like to see us coming. And quite frankly, we've had some banks. The banks are normally better. Of course, a lot of people have to use the mortgage brokers because the banks, for whatever reason, won't give them a loan. And they do have their place. But we have seen banks do that. They really don't like to see us coming because they, not only do they get in trouble with us, but they get in trouble with the federal government. And even if it is a national bank in this state that we don't regulate, if we get a complaint about it, if the OCC and the FDIC cannot get there within like 3 business days, then we go. So that's, they don't, we regulate the financial industry in this state. And Kentucky Bankers Association, which is a big, they're statewide organization. They may not particularly care for us, but they're awfully glad we're there. And if we find something wrong, they take action immediately themselves. So, because we don't want to undermine it any more than we already have. So, any more questions?
Do you know if any other state has an organization like this?
42. 42. Yeah.
How can you get a number, or can you just go to OFI, say Tennessee or OFI, Georgia?
You usually find it either under Department of Financial Institutions or Division of Financial Institutions. Go on to any state website, Kentucky or Kansas.gov. If you can't find it that way, because I've had to do this in some states to find sister organizations, if you go on to the government website, the actual state government website, and you type in like banks, credit unions, mortgages, something like that into their search engine, it will take you to where it is. There are some states that do not work it like we do and like some other states. Our sister state of Indiana, as much trouble as we have right there with Louisville being, and New Albany and Clarksville and Sellersburg and all that, we've actually got a situation right now where we're working southern Indiana with the federal government because there really is, as far as mortgages and that type of thing, the state of Indiana does not do much regulatory action. That is changing for the most part with a lot of states, but there's actually 42 of us that do have some type of regulatory agency. If you can't find it, call us, we'll find it. Okay?
How long has your office been in operation?
Since the 1920s. Since the 1920s. Yep. We've got some of those state government workers who don't work, but I'm here to tell you the biggest portion of those work our butts off. There's some of them that don't, but there are 130 of us, all total, to do the exams, investigations, the administrative things that occur in the offices. We actually have an office in Eddyville, Kentucky, by the way. It's the closest one to you. Yes, ma'am.
Like you sold a house and you made money off of it, you bought a littler house. I mean, I thought at a certain age or a certain, if you only sold the house once, you didn't pay taxes, but you would pay Social Security? I mean,
At age 55 and older, okay, and I think I'm right about this level now. If this is the first time you ever sold a house, and it's $250,000 and under, I think that's the threshold now, then you don't have to pay taxes on it. And so far as the Social Security side of it, I'm not 100% certain. I know there is some type of a sliding scale at least there. I don't know I don't know how it affects Social Security, but there is a federal law. That actually used to be $600,000 when that law was first put into effect. it's gone down to, it's in the 200s, and I think it's $250,000, somewhere in that ballpark.
But evidently, if you're selling a house, it's something to check into.
Yes, ma'am. Yes, ma'am. And Social Security Administration could tell you about their side of it. So, anything else, sir?
Why does Social Security people have any?
I don't think it really affects, you know, she's asking if it would affect your, you know, your Social Security, what you would earn, and I don't think it does, but that would, yeah, it's got capital gains, but it does have to do with if you, it's a one-time thing, and it's still in effect with the federal government, but I would, before I do it, I would ask questions of everybody, because I'm not the expert on it.
And I don't know what I'm thinking, that you pay taxes, if you pay taxes on a house, that you still, one time in your lifetime, you can sell a house and not have to pay taxes on it.
It's over 55, and I know that there's still, you know, part of that law out there, but it doesn't affect most people, because by the time you're 55, if you've owned a house, you've usually already sold a house and that type of thing. So, I mean, that's, we could direct you to the people that can tell you for sure.
Is this something new that Social Security is doing?
She's asking if it affects Social Security. I don't think it does. The tax part of it is something that I've dealt with in the past, so far as the tax side of it. And, you know, one of the things that used to be on these homes that are going into foreclosure and they're short sold or whatever, say you owe $150,000 on your house, and you're able to sell it for 180 or something like that, up until, and this is something slid through on the federal government side that we did not know about, and that was that you would have to pay the taxes on that difference. And now the feds have now passed something just recently, because I know our attorneys in Frankfurt have been trying to find that congressional law that may be out there in which that they're trying to avoid part of that now. And that's all got to do with this foreclosure stuff and all the mortgage things that are occurring. But like I say, we don't absolutely, even our office doesn't know what that is. That's awful to say, but Congress doesn't necessarily tell us either until things have already become law for quite some time and we stumble upon it. So, but there's something out there on that right now. So, but I don't claim to be the expert, so I'm not going to tell you absolutely what it is. Is there any other questions? Call us if you need us. Ask me questions. Be glad to try to help you. Okay? Thank you all for coming.